So, Trump just unveiled what he calls a $600 billion deal with Saudi Arabia. Sounds massive, right? But is that number real? Or is this another classic Trump headline stunt? Let's break it down. Because this isn't just about oil or money. It's about survival. Not just Trump's political survival, but the future of America's global power. Because here's what no one's saying out loud. This deal looks a lot like something China already did. In fact, China's been building deep ties with Saudi Arabia for years. Currency deals, tech investments, even military cooperation. And now Trump is suddenly showing up in Riyadh, shaking hands, signing papers, and promising big things. Right after launching a brutal tariff war that pushed America's allies straight into China's arms. We should remember how Biden messed up the United States' relationship with Saudi Arabia when he was trying to force Saudi Arabia to comply with some foreign policies, as if the government in Riyadh was supposed to be under Washington. Within that period, China became the biggest oil buyer for Saudi Arabia. So, is there redemption for the US? And why is Trump making this his first official visit to any government? It's simple. If the US loses Saudi Arabia to China and their oil starts trading in yuan instead of dollars, America's entire economic strategy could fall apart. The Petro-dollar system, already under pressure, could crack wide open. And that $600 billion deal? It might be the last attempt to stop that collapse. So is Trump playing catch-up? Or is this a bold counterstrike? Hit that subscribe button and let's get into the details. During his latest visit to Saudi Arabia, President Donald Trump claimed that the kingdom would invest up to $1 trillion into the US economy. That's right, $1 trillion. He said $600 billion was already confirmed, with the rest planned for defense, infrastructure, and artificial intelligence. But the story began to unravel almost immediately. Saudi Crown Prince Mohammed bin Salman quietly revised the figure down to $600 billion. Then US officials and Saudi insiders adjusted it again. And the real number? Likely closer to $300 billion. And even that might be generous. When you look at the facts, Saudi Arabia's actual capacity to invest at that scale is limited. The kingdom's sovereign wealth fund, the Public Investment Fund, manages about $930 billion in total assets. But a large share of that is already tied up in megaprojects like NEOM and international tech investments. There simply isn't enough dry powder left for a deal of this size. Trump's original claim of a $1 trillion deal keeps shrinking. First to $600 billion, then to $300 billion, and now, perhaps even less. No public documents, no contracts, no oversight, just bold declarations that keep shrinking every time someone checks the math. And if that sounds familiar, it should. Trump has made a habit of using inflated numbers, whether for crowd sizes, property values, or GDP forecasts, hoping people won't read the fine print. But this isn't just another PR exaggeration. It's a foreign policy risk. Instead of building alliances on values or strategy, Trump's diplomacy is all about buying loyalty. That might create headlines, but it's a shaky foundation. Saudi Arabia isn't writing blank checks. Its priorities are shifting towards self-reliance and strategic partnerships. With domestic strains, like falling real estate prices and a youth unemployment rate that's among the highest in the Gulf, Riyadh is cautious. That makes China's growing role as a stable buyer even more attractive. Meanwhile, peaceful protesters in the US are getting dragged away in handcuffs for speaking out against government policy. It's no coincidence that Saudi Arabia is the first stop on Trump's international tour. As the world's largest oil exporter, Saudi Arabia has long been central to the global energy market. Its vast reserves and pivotal role in the petrodollar system, where oil is traded in US dollars, have historically reinforced the dollar's dominance in global finance. But that dominance is now facing serious challenges. In November 2023, China and Saudi Arabia signed a $7 billion currency swap agreement, allowing direct exchange of local currencies. This move is part of China's broader push to internationalize the yuan and reduce dependence on the dollar. Today, China is Saudi Arabia's largest oil customer, importing 1.6 million barrels per day. Oil makes up 84% of Chinese imports from the kingdom and fueled a $30 billion trade surplus for Saudi Arabia last year, a lifeline given its ongoing fiscal deficits. Saudi Arabia has little incentive to abandon China, whose energy demand keeps growing as it diversifies away from U.S. suppliers. MBS is playing both sides, welcoming U.S. overtures while keeping China close. It's a classic Middle Eastern balancing act. But what does this mean for the United States, and why is it causing alarm in Washington? The petrodollar system has long supported America's ability to run large deficits without major consequences. But if Saudi Arabia begins pricing oil in yuan, global demand for the dollar could shrink. That would raise U.S. borrowing costs and encourage other nations to follow suit, accelerating the de-dollarization trend. Trump's deal aims to pull Riyadh back into America's economic orbit. Yet the question remains, is this enough to counter China's strategic advances? China's approach is multifaceted. Beyond currency swaps, it has launched yuan-denominated oil futures and is promoting the yuan in global trade. Its Belt and Road investments across the Middle East further deepen its influence, offering alternatives to the dollar-centric financial system. In this context, Trump's efforts, though bold, may be more reactive than strategic. The U.S. must not only respond to China's current moves, but also anticipate its next ones. This isn't just about Saudi Arabia. It's about who shapes the future of global finance. But while that high-stakes game unfolds behind closed doors, Trump's trip delivered other headline-grabbing moments of a very different kind. Another headline-grabbing moment from Trump's Middle East trip came when he unveiled a surprise gift from Qatar, a Boeing 747-8 jet, which he excitedly claimed would be the new Air Force One. "Free of charge," he posted in capital letters. The aircraft, originally ordered for Qatar's royal family and never delivered, is indeed a gleaming piece of aviation hardware. But here's the problem. It's not remotely ready to serve as the president's aircraft.
Some people say, oh, you shouldn't accept gifts for the country. My attitude is, why wouldn't I accept a gift? We're giving to everybody else. Why wouldn't I accept a gift?
To transform a commercial jet into Air Force One requires more than a fresh paint job. It needs an entire suite of top-secret communication systems, countermeasures against missile attacks, custom wiring, refueling capabilities, and a full presidential interior. In other words, retrofitting this free jet would likely cost U.S. taxpayers hundreds of millions of dollars. And that's on top of the $3.9 billion already set aside for 2 new Air Force One planes being built by Boeing, planes that were planned years ago and are already under production. So why would Trump accept this jet at all? The answer lies in the symbolism. Just like the $1 trillion investment number, the jet is a flashy object that allows Trump to show off power and wealth, even if the reality behind the curtain is far less glamorous. But there's a deeper problem. The jet itself is worth $400 million, and retrofitting it for presidential use would cost U.S. taxpayers hundreds of millions more. That raises a serious question. Could accepting such a gift from a foreign government violate the U.S. Constitution's Emoluments Clause? That clause bans federal officials from receiving gifts from foreign states unless Congress explicitly approves them. This isn't the first time Trump has blurred the lines between personal gain and public duty. During his first presidency, he maintained ownership of the Trump Organization, raked in millions from foreign entities staying at his hotels, and often used his political platform to promote personal business ventures. The jet, just like the Saudi deal, follows a familiar playbook. Use the stage of international diplomacy to enrich your brand. Consequences be damned. While in Riyadh, Trump delivered a speech declaring that the Middle East should be defined not by chaos, but by commerce. He praised Saudi Arabia as a forward-looking country moving away from Wahhabi extremism and toward tech innovation, startups, and social reform. MBS, he argued, is not a traditional prince, but a Silicon Valley-style leader driving modernization. This framing, though convenient for the cameras, is deeply misleading. Yes, Saudi Arabia has launched ambitious projects like NEOM and Vision 2030, but behind the slick PR campaigns, the kingdom is still very different from the United States in ideologies and style of government. And while MBS talks about innovation, the country remains heavily reliant on oil exports, with little real diversification. Trump also hinted at easing U.S. sanctions on Syria and warming up relations with Iran, moves that would be shocking reversals of past U.S. policy.
I will be ordering the cessation of sanctions against Syria in order to give them a chance at greatness.
These proposals, mixed with billion-dollar investment promises and personal gifts, paint a picture of diplomacy that is not strategic but erratic. One day, Trump is threatening war. Next, he's making handshake deals with autocrats. When you strip away the gold-trimmed speeches and flashy numbers, what's left of Trump's Middle East visit is a troubling pattern. Big promises without backup. Legal and ethical gray areas. Financial commitments that likely won't materialize. And a worldview that favors personal advantage and instant publicity over long-term American interests. This isn't just about Trump. It's about the direction of U.S. diplomacy in an era where style often replaces substance. If America begins treating allies like investors and adversaries like customers, what happens to its role as a global leader? It's not just a trillion-dollar illusion. It's a warning sign. One that suggests the very foundation of U.S. foreign policy is at risk of being sold to the highest bidder, or worse, to a mirage. However, the biggest beneficiary from this Saudi Arabia deal is perhaps Nvidia. Until recently, Nvidia, the company behind the powerful chips that train artificial intelligence, was in trouble. For years, China had been one of its biggest markets, but that changed fast. Despite Nvidia CEO Jensen Huang's best efforts, China began turning away. U.S. restrictions had banned Nvidia from selling its top chips, like the H100, to Chinese companies. To get around this, Nvidia designed weaker versions like the H800 and H20, but those didn't quite do the job. China, meanwhile, wasn't sitting around. It launched a full-speed effort to build its own AI chips. Chinese startups like DeepSeek figured out how to train huge AI models using cheaper, less powerful chips by getting creative with software tricks, like using something called a mixture of experts model. It's like using multiple small brains instead of one big one. And it worked. That meant they didn't need Nvidia as badly anymore. And that? Well, that shook up Nvidia's future in China. The company's stock took a hit, and there was real concern that it was losing its grip on a key market. So where do you go when the world's second-largest economy shuts its doors? Here's where things get interesting. Trump helped broker an agreement between Nvidia and a new Saudi-backed AI company called Humane. The Saudi government, through its massive public investment fund, promised to build one of the world's biggest AI data centers. And Nvidia is supplying the chips. We're talking about a 500-megawatt AI computing center. That's massive. For comparison, it's like powering hundreds of thousands of computers all working on AI at the same time. Over the next 5 years, Nvidia will send hundreds of thousands of its AI chips to the region. And the market loved the news. Right after the announcement, Nvidia's stock jumped 5.6%, closing at nearly $130. That's a big leap in a single day, and it wasn't just Nvidia. Companies that make the servers and parts that go with Nvidia's chips, like Supermicro, also saw their stocks surge. This deal signaled something huge. The Middle East is now a serious contender in the AI arms race. But here's what makes this even more fascinating. Saudi Arabia isn't the only Gulf country eyeing Nvidia's hardware. The U.S. government is reportedly considering a deal that would allow the United Arab Emirates, UAE, to buy over 1 million Nvidia chips. If that happens, we're looking at a new AI power center rising in the Middle East. For Nvidia, this is a golden opportunity. After being pushed out of China, it's now aligning with oil-rich nations looking to shift away from fossil fuels and into tech. And artificial intelligence is the new gold rush. Some analysts believe these sovereign AI projects, led by countries like Saudi Arabia and the UAE, could bring Nvidia $3 to $5 billion in chip sales every year, potentially reaching $20 billion over time. Trump may be playing economic chess, but what if he's just reacting, not leading? The stakes are bigger than just chips or oil. This is about whether the US can still set the rules or will have to follow them. And this deal? It might be the last move before America gets cornered. Trump may call it a comeback, but it might be a last stand. So if you want to keep tracking how this power game unfolds, hit subscribe and don't miss what comes next.